以下为洪灏总2024年12月16日在 CNBC 的电视采访。洪总表示，今天消费数据低于预期，投资数据仍弱，货币政策将在明年两会前继续支持经济，但常规政策作用有限，财政政策也需要时间，是时候进行非常规逆周期调节了。贸易战将使汇率承压。然而，强美元是美国乃至全球经济的逆风。人民币弱势加上中国破纪录的顺差，都与当年广场协议的背景相似。
Impetus to then roll out some more sort of, I suppose, demand-side stimulus, consumption stimulus, before they even get a clear picture of what Trump's trade policy is actually going to look like?
Yeah, I think in the Politburo meeting, the stimulating consumption, expanding domestic demand is actually put on top priorities. Right, so this is probably the first time in more than 10 years in the Politburo readout, consumption actually occupies such a priority and important space. But then, there's not much detail going on, in terms of how you're actually going to do it. And also, we know that the government has the aversion of, handing out cash. And also, lowering taxes, stuff like that. So I think right now, most of us are still waiting, for more details. But because, this is the Politburo meeting is the last sort of important meeting for the year. So then, until next March, we probably won't hear too much details.
How much stock are you putting into the tweaks in the lingo that we got from the authorities last week? Because if you play the sort of language game as to when these sorts of words have appeared before, yes, no doubt we haven't heard things like loose monetary policy since post-GFC and some of the new language certainly around the counter-cyclical policy as well. But, I've been listening to a lot of economists who sort of argue that they don't seem to believe that the authorities over in China, particularly the PBOC, had been necessarily prudent in the first place.
Yeah, well, I mean, if you look at the Chinese bond yield, right, so the 10-year bond yield is making all-time low, week after week. It's telling you that, there's substantial amount of liquidity in the system, right? So the system is not lack of cash. Now, the problem is that, people are unwilling to spend, businesses are unwilling to invest more. Right, so this is the time when you need unconventional policy. You need the government to spend on behalf of the rest of the society. So I think twisting words and all that it has a sort of a mildly stimulating effect in terms of how you encourage the sentiment to come back. But since 24th of September, right, so the last week of September, we have a whole series of meetings, talking about different priorities. How to stimulate the economy, how to steady the stock market and all that. But all in all, it's only the PBOC who has been loosening monetary policy, and also there's some physical bond issuance details coming out in those meetings. But then to implement those bond quotas, to actually sell the bonds to the public, so that to raise cash to replenish the government's budget actually takes time as well. Right, so now we're at the last 2 weeks of the year. We're obviously running out of time.
Indeed, and how you're talking about seeing another 50 basis points of RRR cuts. I wonder how these RRR cuts really transmit through the system and help the system at this stage. And is it really a tool that the PBOC should resort to at a time when you're not really seeing that much impact and result of that liquidity infusion in the system?
Yeah, the purpose of a RRR cut really is to lend the commercial banks to have more ability to lend, right? So because there's a ratio that you have to stick to, when you make commercial loans. Now the problem is that the loan demand is still very weak. Even though in last month we're seeing financial data showing a small pickup in M1 supply and also a small pickup in home loan, and that is because the housing market, the property market, has a slight pickup in sales in the month of October, but then after that, we're all quieting down again. So I would say that triple R cut is better than nothing. But since we've been cutting triple R for some time now, but business loans fail to expand. So I would say that a triple R cut, it is not too helpful at this stage.
Yeah, it's almost misfiring, right? How? Because at the end of the day, we've come more than halfway when it comes to the triple R cuts that we've seen thus far, and
That's right.
the benchmark triple R rate is, I think, below 7% now, 5.5–6%, I would imagine.
That's right.
And so this is just a signaling mechanism which
it's
does
only
not
useful.
have real.
Yeah, it's only useful when you have a substantial loan demand for it, right? So
exactly.
when the bank's lending ability is hitting the roof, then you cut triple R, to let the commercial banks lend some more. But just now, the series of data Sam mentioned, right? So we're seeing investment, especially real estate investment, is still down substantially, right? So people shouldn't be surprised to see, the loan demand will remain weak for some time.
Yeah, absolutely. Ha Hong, we're just going to go for a quick break first, so do stick with us. We're going to continue this conversation. That is Ha Hong from Grow Investment Group is staying with us. We've got lots more coming up here on Street Science. We'll be right back.
Group, how I do want to get your sense in very quickly on how you're looking at the whole currency situation, because everybody's talking about how the currency might be weaponized against tariffs.
Yes. Well, from the trade war episode in 2018, right? So the Chinese currency did depreciate substantially during that episode, and as you can see, in early October, the Chinese currency was trading below 7, and now it's around 7.3. There's already quite a bit of depreciation going on there, and I think the market is looking out for a slower, a Fed that is cutting slower, and also a PBOC that has to cut, to counter, all the pressure economically speaking, and also all the pressure from Donald Trump as well. So one shouldn't be too surprised to see, the depreciation pressure on the Chinese yuan would continue for some time.
And so where do you think that weakness would take the Chinese yuan? How much would the authorities want it to weaken or allow it to weaken, actually?
Yeah, I think one shouldn't be too surprised to see, it's 7.5, 7.6 and above. Right, so in some extreme scenario, if Donald Trump really slapped on, 60%, 100% tariff, it would be way beyond 8. Right, so, this is not a scenario that we're looking for, because, if it happens, right, so the pressure on the Hong Kong stock, for example, and also on the Chinese asset price will be quite substantial as well. But having said that, because the U.S. dollar strength has been relentless this year, especially after Donald Trump won the election, right? So it's up 5–6% since then, right? So all the emerging market currency is feeling the pressure as well. So I think in this scenario, a very strong U.S. dollar is actually a headwind for the U.S. economy and also for the global economy as well. So one should be look out for some potential scenario that a Plaza Accord, a new Plaza Accord could be happening in the coming years. Because now the U.S. dollar is excessively strong, and also the Chinese currency is weak, and at the same time the Chinese export has been very, very strong as well.
Ha Hong, given you're saying that sort of monetary policy will be used in the meantime as we sort of enter a couple of months of policy dead zone, because we don't really have much going on as far as China is concerned, and no doubt we'll see a lot of reaction to the headlines coming out of the US as we await the NPC. I mean, how many quarters do you anticipate then, if we know that the cost of capital is not the constraint here, to see an actual improvement in, as far as deflationary pressures and some of the rebound in corporate earnings? How many quarters do you anticipate that's going to take, given we've already seen probably the best of 2 years of continued relentless support for the property sector, and only today you're just seeing marginal improvement?
Yeah, I think that, if the property sector doesn't recover, then it will be very difficult for loan demand to expand, Right? So if you want to prop up the economy, if you want to maintain a growth target of around 5%, then you will have to reinvest in many of the production capacities and create even more overcapacities. Right? So the pressure on pricing and also the pressure on your foreign trade partner would be like so substantial. So I think right now there's no easy way out. The central government is the only part of the economy that has the balance sheet and has the ability to expand. And I think in the last quarter, we've seen some moves already, right? So for example, raising the quota for bond issuance, helping the local government to resolve the debt load situation. But it's not nearly enough, right? So the headwind, the deflationary headwind that we're facing, has been on for more than 2 years now. In upstream, it's close to 3 years. Right, so I think anyone in China, if you're traveling in China these days, you will notice that prices has come down substantially.
Yeah, and so if we're likely to see this sort of persistent deflationary pressures and, the profits at these companies being weighed on, the margins continuing to be squeezed, as you've sort of alluded to, what do you focus on in this market then? You said perhaps pay attention to the A500 mid to small cap tech stocks. Is this sort of an area you believe could be fairly insulated from sort of the continued macro headwinds?
Yeah, well, I think they will outperform the rest of the market, because these are the guys that focus on domestic economy, and also they're likely to get policy subsidies and help from the government. I think already, right, so if you look at the rally, the rebound since late September, you're seeing, this part of the Chinese market is actually doing resiliently. And also, some of the smaller cap indices is actually making new highs, right? So that is telling you that the money, the liquidity in China is actually going into these sectors. So if you look at for example, the margin lending and margin purchase of the Chinese stocks, then you will see, the margin lending is actually increased together, with these smaller cap tech indices. And that is telling you that, not only, some of the fund managers are buying into these firms, and also the retail money is going in growth as well. So I think this remains one of the brightest spots in the Chinese market.
Right. Okay. So that's equities. What about the bond market? I mean, what do you make of this divergence we're seeing, and also the reports about the PBOC checking in on the banks and their bond purchasing activities? What is that telling you about their discomfort with these record lows, which I believe that yield differential is now the widest in around 20 years with the US, no doubt putting pressure on the yuan? That's right. That's right. I think unless the deflation pressure is easing off, then the bond yield will continue to make new low. We're already making new low week after week. I think the PBOC is concerned, because now much of the money is going into the treasury market. In China, the commercial banks are the main buyer of treasury bonds. Now, the problem is that, if you suddenly come up with a really strong stimulating policy, then, the bond yield will shoot up again, and that's going to destroy a lot of positions if the commercial banks having very concentrated positions in treasury. So I think that's what the PBOC is trying to avoid. They're trying to avoid a liquidity squeeze situation where, the bond yield shoot higher because of a very strong policy dose, and, that could ruin some of the commercial banks' balance sheet. So, there is a remote risk, but for right now, I think much of the bank's money is going into the treasury market.
Yeah, that seems to be the case. Hao, thank you very much for breaking it down, the decision for us, the data trio drop that came out just a little while ago, and giving us your perspective in China. More market action when we come back in 2 short minutes.